Good morning, welcome to Nifty Prediction. My name is Narendra and I'm charging 1,000 rupees per month. You will get advanced prediction details as well as calls in the group. Before going to Monday prediction, I will review the Friday market prediction. Nifty ended up in the positive 14,347.25, 209.90 points in the positive, 1.48% in the positive, around 14,258.40. It's the pre-opening, and the pre-opening clearly it's the above the previous closing, and the low is also not broken the previous closing, and market ended up market ended up in the positive, almost near towards the high 14,367.30. Let's go to our prediction review. We know it is in the volatile range, but still all data are in the positive except the weightage. All remaining in the positive, 3 data are in the positive, so positive has a little upper hand, but the volatile market, because of difference of 1 point comes, it shows the volatile market. But somehow we have the basic rule that anything open the pre-opening in the positive, we need to keep the previous closing or support level 1 as a stop loss for the bullish market with a target of positive average. And anything opens volatile above means we need to keep stop loss in the overall average. Overall average is not a different points, which is from the previous closing around 3 points, so it is clearly showing the pre-opening is in the above volatile level. So we have saw so many times, you can check my past videos. The stop loss need to be maintained 14,147.14 is the stop loss for the bullish market. Anything above, so the target of 14,256. Actually market is gone beyond that level, because after the positive average, if it is breaking the stop loss of 14,266.81, that is the indication. If it is breaking, then further uptrend we have saw so many times. Once if it is broken and it is moving towards to the upper trend, which is on the resistance level 7, and market has reached 14,365 as well. So the basic rule I'm talking about, and the pre-opening itself, market has opened in the range of 14,258, which clearly indicated that it is on the bullish. But we have the negative target still open, so anytime the market may come down in the coming week. So the market has pre-market opened in itself in the above the positive average. So how we need to trade on in these kind of opening means the market might have just fall down, but keeping this overall average as a stop loss, because if this stop loss is not breaking, market will once again go up. So that is the way it is work. For example, the same data, how we need to trade on the negative side. For example, if the market is opens in the volatile level, I'm talking about the Friday data. Exactly, if the market is pre-market opens in the downside, you need to keep this overall average stop loss for the selling. So 14,167.14 is the stop loss for the selling if the pre-open is on the downside. For example, anything below 48 points, if it is opens, means we know the target of negative average, that is the first target. But if pre-open itself opened above that level, means it might go towards to the average level. So the same data we can trade on the negative scenario as well, the same data we can trade on the positive scenario as well. So it is purely depends on how the market is going to open, because we have the clear indication that 3 indications showing positive, 1 indicating on the negative, so which means it is kind of a volatile. But if clear volatile means in the pre-open itself, market will open in between, so which means it will oscillate in between the positive average and the negative average. But here what happens, the pre-open itself, market opened above the positive average, clearly shown 14,256. Above that level it has opened. I'll show you clearly with the split screen, so you can able to understand much more easily. because the rules are same, so rules will not be changed time to time. So the rules always be the same. You need to trade. If you have this chart in the hand, if you see my video, you can easily trade. Okay, see, so it is clearly above the positive average. So anything over volatile means we can trade in the stop loss range, these two stop loss range. So the low is 14,221, so exactly matching in the resistance level 2. So we can trade accordingly if it is matching with the data. So matching data is means difference of 3 points, and stop loss is difference of 10 points. If you're selling, you need to add 10 points stop loss. If you're buying, you need to subtract 10 points. Any level you can trade, but the matching level is 3 points. So always it is matching. See, high is also matching with the data, 14,367 exactly matching in the data in this level, 14,365. So it's always matches in our data. So how we are going to trade on Monday? I will take out the split screen now. I will show here itself. The data for Monday is showing 12:9, 2:0. The absolute frequency is evenly poised, 0:0, because we don't have absolute frequency on Monday, and weightage is on the positive 5.404. So it is indicating bullish market. So market may open up once again in the positive, but this indicates that you need to play little cautiously. You need to keep at least one put option, minimum of 10 rupee. If you are trading in the options, you must have to keep one option for the safety or insurance. Why? Because it might go or open in the gap up. If it is matching with the high, it might fall down heavily, because we have the target in hand. The target is still open on the downside, 13,972. This target is still open. So you can see almost 350, 360, 70, 370 points is there. If it is opens up gap, for example, 100 points or 200 points, if it is gap up opens, means it is a good chance to fill up those 400, 500 points if you have some kind of options in hand in the put option. So this open target is there. So how we need to trade on this particular? So it is clearly showing if the market is above volatile 1, which is indicating bullish, but with the stop loss of the overall average. This is the basic rule. So anything opens above 96 points and above, which it is indicating that bullish market with a stop loss of overall average. So what is the risk involved in this? Because it is showing bullish, the market is opening above this level, but still it might have chances to fall down if the high is matching. For example, the market is opens above 96 point, which is 100 point plus. If it is opens and it is going towards to 14,500, the high is matching around 160 points. It is going from 100 to 160. It is going high once again, the all-time high. The high is matching somewhere in the 14,500, 507 or 14,519. The high is matching with 3 points inside. So after matching, it might have chances to fall down. So that is the one thing we need to watch out. Why? Because the data on the absolute frequency is 0. But as per the bullish market, you must have to keep stop loss in the overall average. But the warning is there, it might have break this overall average as well. If the high is matching somewhere, for example, I'll take that resistance level 7, 14,507, or it might go on the next level as well. Bullish open target level 14,530, 14 positive average 14,555. So any level it can keep high. So we need to watch out the high where it is matching. So if it is matching exactly 14,507, which is matching, so the difference must not be more than 3 points. If it is more than 3 points, it might be in the stop loss range. For example, stop loss range we need to keep 10 points stop loss. So up to 14,517 we can take. So 517.94, almost 1 point is that. So 517.94 up to that level, 94 up to that level, 94 up to that level we can wait. So then after that we have 14,519. So adding 10 points stop loss, almost it gives you bullish open target level. So 14,530. So where it is going to keep the high perfectly, we need to watch out. That is number one. If it is matching, then you can take a risk by keeping 10 points from that high as a stop loss and go for a sell, because that is the way it is. If that particular high is not breaking, then it has a good chance to fall down. So this is the one method you can trade. And if it is breaking down from the high, for example, the high is matching exactly at 14,507 or maybe 14,519 or 14,530, any levels, those three levels, 14,507, 14,519 or 14,530. So any three levels the high is matching and the market is started to fall down. So if this overall average is not breaking, which means 14,365, so minus 10 points means 40,355. So 14,355.90 is not breaking, the market will once again go up from the low. If it is breaking, it will go for the downside. So how the downside is going to be, it will be heavier. It might go any level. Once if it is breaking the overall average, there is no rule. After that, the bullish rule still we are having this. Once again, it might have the chances to reverse at support level. That is the rule we still have for the bullish, around 13,317 minus 10 points. So 14,307. This level is not breaking, then the reversal will also happen. But if it is breaking quite fast, then it might go towards to any extent around negative average bearish level or even support level line, which is around 300 to 400 point negative. Why? Because we have the target open 13,972 pending target, so which is there in the support level line. So that is because it is not certain that that particular level will go on Monday, but there is a possibility to go. That is the reason we need to play much more cautiously on Monday, because if it is breaking, it might go heavily as well. So we need to know, because this par value is indicating that anything opens less than 121.90 points in the pre-opening attracts a negative side. So this is the one particular thing which we need to keep it in mind. The pre-opening is less than 121.90 points attract the negative side. If negative side is heavy, then it might go from the positive towards to the negative, and then towards the negative target 2, which is 153, and then negative target 3 around 280, and the low is around 407. So after that it might go anywhere, even freezing also possible. So we need to play much more cautiously on Monday. If the pre-opening is in the negative side, you know the basic rule, volatile level 2, overall average stop loss for the bearish, and if the bullish, and the basic stop loss for the resistance level 1 is for the bearish. These are all the common rule. And bullish also, you know, volatile level 1 above, overall average stop loss for the bullish, and if anything opens in the positive, and support level 1 another stop loss for the bullish. Let's see how the market is going to give us on Monday. Thank you.